In my last video where I showed you my dividend income for November, I received a comment that told me to sell British American Tobacco. And before you say I shouldn't be taking advice from YouTube comments, let me tell you why I sold all my shares and what I'm doing with the cash after the sale. Let's get into it. Taking a look at the stock price, we can see that BAT has been doing terribly over the last year, suffering a gradual loss of about 25%. Then it took a massive hit of about 10% at the start of December. The tobacco industry has been on the decline for years now and has been known for decades that smoking causes cancer and many other illnesses. But nicotine, which is in tobacco products, is very addictive, and so it has been a very slow decline in the industry. Less and less people are smoking every year, as we can see in this graph, with statistics showing that nearly half of all smokers want to quit smoking, and more young people not smoking. All the signs point to a general decline in the industry as a whole. But this decline in smoking has been met with an increase in e-cigarettes or vaping. Currently 9% of the UK population vape, and this has increased from 2.7% 10 years ago. And this is assumed to be growing. These stats also match the US. I'm sure you watching this have seen vaping increase in popularity recently. Now back to British American Tobacco. BAT owned the vape brand VUSE, and BAT claimed that VUSE has a 36.8% market share globally, and a 46% market share in the US. This has grown from around 35% last year. The growth is good in terms of revenue, but it should be known that BAT's vaping division is yet to be profitable, and isn't expected to be profitable until the end of 2024, which won't be seen in their financial reports until their 2024 half-year report, which is released at the end of next year. I mentioned in my last video that BAT would need to win the vaping industry for it to be able to continue, and this will remain to be seen for another few years. With the constant threat of government regulation and health effects of vaping products not fully known, I believe that there is a lot of uncertainty about the future of the industry. BAT's stock price dropped about 10% at the start of December, and I think I need to explain this a little bit. So BAT mainly grew their revenue by making acquisitions of other companies. Their most recent and biggest acquisition was of Reynolds American Incorporated in 2017, and when making acquisitions of this size, the brand value of those other companies needs to be taken into account and added to the current company. This is considered goodwill, or the brand value of the assets, and in this case, it's the value of the cigarette brands that British American Tobacco owns. But in the first week of December, it was announced that this brand value, or goodwill, had been reduced in value by £25 billion. More than a third of the value on their balance sheet, from 67 billion to 42 billion. For a company to lose a third of its value in one go, on one day, is very significant. And I'm surprised that the stock price did not drop by more than the 9% that it did on that announcement. BAT stated that this reduction was made due to economic headwinds damaging sales in its biggest market, which is a bit of waffle, basically confirming all of the things that I have stated above. People quitting smoking and switching to vapes. And something else mentioned was that their customers were switching to cheaper competitors. All of this information is showing that the damage has already taken place, and to recover a third of value will take years. And in a declining industry such as cigarettes, it's likely to never happen. So this write-down affected their stock price and quite honestly gave me a little scare, confirming that I needed to sell. And unfortunately I did have to take that loss, as I could not see the stock price recovering anytime soon, considering I was 25% down. So let's take a quick look. I had 32 shares, and my average price was £30.03, and I sold at a price of £22.92. Now this does come to a 23.7% loss. It isn't great, and I did make a mistake buying where I did. Going forward, I want to make sure I fully understand what I'm buying into before committing such a large portion of my portfolio. BAT was about 7% of my portfolio, but at the time I made the first few buys of that stock, back in February and March 2023, it was about 11% of the portfolio. So if you're watching this, I hope this has given you some understanding of what making a mistake in investing looks like. And even though I did make a loss, it's £230, which seems like a lot, but it's only about 2% of the portfolio. And I can make that up quickly if I make some good decisions in the near future. So now on to what I'm doing after the sale. I thought about making this video a two-parter, where now I would show you a new company that I bought, but I haven't found that new company. I'm still searching for a new company to invest this capital into. So for now, I'm just keeping a cash holding of around 10 to 12%, and I'll be waiting around for any company that looks like it's at a good price. I'm still reinvesting into the companies that I hold at the moment, but I haven't put any large amounts of capital into these companies. Stock markets are at all-time highs, and most of my companies are in the green, and have had a pretty good year. I'm on the lookout for new companies with good dividend growth, great fundamentals, predictable revenue patterns, and low debt. I'm going to still be buying into the ETF VWRL every month, But other than that, I'm saving my cash for 2024 and doing some research. If anything major happens with companies I'm currently looking at, then I can be straight on it. Let me know down in the comments any companies I should look at. That is the end of the video. Thank you for watching this far into the video. If you liked the video, give it a thumbs up. Any suggestions on improvements to the video content or ideas for content going forward, leave a comment below and I'll give you a reply.